Look at the Russell. Look at the Russell versus other indexes. Holy smokers. That's no flipping flapjack and jokers.
It's not necessarily.
It's like 20x in the NASDAQ here today.
That would cause
oh my gosh.
Enormously.
Hold your horses, okay? The consumer is barely at the beginning innings of even feeling any better, okay? 2024 is when the consumer, the average person, will feel a lot better because real wages will be in a really good place and inflation will be very low. But this is just like a very recent change. It takes a while to catch up to the consumer. No different than we already had inflation hit in 2021, but the average person didn't really feel it as much. All of a sudden 2022 hit, everybody felt the inflation. And then all of a sudden everybody's talking about inflation, right? And obviously into this year. So there's a lag time there. So I think that's important, right? Howdy, folks. Hello, hello, hello. I see everybody flipping some flapjacks out there, putting some flapjacks in. Holy smokers. You know, right off the bat, we're going to take a peek at the market, some stocks. I want to hear that. I think he said, did he say Marko Kolanovic was about to be on? So I want to listen to that, react to that. Obviously, after the bell, we have Lennar earnings, which is a major home builder. Actually, I think they're technically the biggest market cap home builder out there, or very close to it. And then also, obviously, Costco. Really want to hear Costco. Really looking forward to not only Costco's earnings, but the conference call on Costco. We will be reacting to that live. I think that's going to be a really important one. You guys definitely should stick around. Even if you have no interest in owning Costco, you know, you'll definitely want to stick around for that conference call because we're going to learn a lot about the state of the consumer. How is the holiday shopping season going? This is this is the last big retailer to report, and we're only 11 days away from Christmas. So this is ideal that we can hear what Costco's saying about this holiday season. That's going to give us some clues about, is this an okay holiday season? Is it a great holiday season? Is it a meh holiday season? I think Costco's going to give us a lot of context. So once again, even if you have no interest in owning Costco stock, you don't own a Costco stock, you're going to want to stick around for that. It's going to be really important. Also, you know, you can just learn kind of how I kind of look at these conference calls, what I think is good in them, bad in them, all those sorts of things, okay?
A different view.
Look at the Russell. Look at the Russell versus other indexes. Holy smokers. That's no flipping flapjack and jokers.
It's not necessarily.
It's like 20x in the NASDAQ here today.
That would cause
oh my gosh.
Enormously. I kind of think he's talking his book a little bit. I mean, we've got a lot of bonds that need to get issued next year across.
The OG Art Cashin clap, yeah. Looking forward to hearing him in a moment. That should be intriguing. This is not Art Cashin, by the way. Not Art Cashin.
Annual holiday get-together with Art. Art was surprisingly bullish on the year ahead, noting that this year's presidential elections with the incumbent in office are often up years because of the spending that's involved. He was also surprisingly bullish on the effects of AI on the economy next year.
I think AI will ultimately prove to be as strong as the invention of the wheel. Everybody concentrates on the chips, but people like Walmart and Amazon, they will use artificial intelligence to find a way of marketing and marketing more directly to their customers. They will anticipate the needs in a more correct manner, and therefore the economy as a whole can grow dramatically if we get past all these other liquidity problems and we let artificial intelligence begin to run full out. We're moving to a different world, Bob. We're moving to a very different world.
This from a man who still uses
a
flip
shocked.
phone, and he writes his letters in longhand every day and dictates them to his secretary. Now, Art did have some worries about next year, especially about the effects of commercial real estate.
Art Cashin bullish on AI?
About that. He talked about the high cost of financing the Treasury debt, and he talked about how this massive December rally could drag in more investors from the sidelines in January and lead to a bubble that could cause a first quarter pullback. It just made the whole year to see Art again. I have been doing this for almost 20 years. By the way, he's going to be here the last day of the year, December 29th. He'll lead everybody singing Wait Till the Sun Shines, Nelly, 100-year tradition down here. And
that's
he
awesome.
doesn't come down on the floor very often.
You get the feeling from talking to him and some of the sound that we didn't have a chance to see that he's surprised that the market had the kind of year it did relative to a tightening cycle, the likes of which, you know, it's historic, and he's seen He's seen many of these cycles before. I got to believe he's surprised to some degree where we are.
I think he was as surprised as everybody else. Last year was the first year in 20 years we didn't do a full interview for various reasons. But I know how he's felt throughout most of the year, that the probability of avoiding the recession was extremely small. And he studies market history. I leared market history by hanging out with him.
Walking stock.
He is a stock market history. I mean, that man is the history.
Is very, very small.
Been in the market for 100 years. Like, come on.
But he felt that
he is the history. It's like a permanent history book.
We love him. You send him our best. Would you? I know you will. That's Bob Pisani, of course, with the legend Art Cashin. Up next, Intel holding its AI event today.
So, and somebody said, in regards to Art Cashin, they said, what? These guys are too old. They need retirement money faster. You know what it comes down to? Because I was talking to somebody about this recently. Like, talking about Munger passing away, obviously, and like, Buffett and these guys being in their 90s and still like working, right? Still looking into companies and investing and traveling and those sorts of things. And it's interesting because a lot of people think, oh, they're just trying to get more money. And why are they trying to get more money? Like, you're at the end of your life. Like, if you're in your 90s, you're at the end of the road, right? It's not about that. The bottom line is, you listen to Charlie Munger speak, even weeks before he passed on, right? Nearly 100 years old he was about to turn. You listen to Warren Buffett speak nowadays, and at 90, what is Buffett now, 93 years old or so? These guys are so freaking with it. And one of the reasons is outside of like, genetics and those sorts of things, I think one of the reasons is their minds stay so active because they're still in the game. They're not just retiring and, sitting around on a recliner all day and letting their minds deteriorate. They're still working. They're still using their minds on a daily basis to think about deals and run valuations and think about very complicated topics, right? And I think that's one of the reasons those guys are still so, can still be so with it, right? More with it than 90% plus of the population, even though they're so advanced in their age, right? Because, you listen to some people that are in their 70s even, or 80s, and, talk, and it's just like, oh my gosh, like they're just so not with it. And then you listen to guys like that talk about very complex issues, and they're just so on top of their game still. But it's like, the old saying, like if you don't use it, you lose it. Same thing physically with your body, right? If you just never work out and never do anything as you get older, like your body's going to deteriorate so much faster, so much more rapidly than if you're actually using your body and staying in shape and exercising as you get older, right? Keeping your flexibility, keeping some muscle growth. And what that does to your hormones and your bones and everything like that, it's very impactful. So that's what it comes down to with these guys. Like, sure, if they want to go to the beach for a week or 2 weeks or a month or whatever, they can do that. It's not about the money at that age. It's about staying active. It's about staying with it. It's about keeping your mind, okay? And so just a little food for thought there. Because you just sit on a recliner all day, I'm just telling you, you're going to deteriorate massively in a very quick amount of time, right? And that's the problem. A lot of people retire, then they don't really do anything. They don't really keep their mind active like that. They're not really passionate about anything anymore. And they start to deteriorate physically and mentally rapidly as those years progress after they retire. You've got to stay on top of this stuff. So just a little food for thought as everybody ages out there over time, right? Okay, so waiting on Costco earnings here and Lennar earnings up here, folks. We're waiting on those. Kind of see where things finished out here today as far as stocks go. By the way, I will grade Costco's income statement. I will grade Lennar's income statement here live, and I'll post those up for you guys here. And I'm really looking forward to that Costco conference call to see what they have to say. But
hey, John, it's a top and bottom line beat for Costco. The retailing reporting EPS of $3.58 per share. That is a beat of 16 cents. Revenue coming in at $57.8 billion, slightly ahead of the $57.7 billion that analysts were looking for. Costco also announced a special one-time cash dividend of $15 per share. No word yet on whether they plan to increase their membership fee, but the call kicks off at 5 o'clock, and that is certainly top of mind. Shares about flat right now. Back to you.
Well, yeah. I mean, thank you, Pippa. And that stock is, just about flat after hours.
Yeah, it has been trading right near all-time highs, though. So
wow.
We'll see. We'll see what
Costco.
we get with those membership fees, back to Pippa's point. And, of course, we will have an analyst who's going to break this down for us shortly.
Not so great numbers from Costco.
Hang in there.
They barely beat.
Retail sales turning in a surprise gain for November. The latest 3% versus expectations of a drop of 0.1%. And that's despite a 2.
Yeah, I mean, that's not great. I'm going to be interested to hear this Costco conference call, folks. For Costco, those are, for them to barely beat like that is borderline bad numbers for them, right? I'll grade the income statement in a moment. I'm sure it's going to be phenomenal because it pretty much always is phenomenal, but this should be a really interesting Costco conference call because I'm surprised they barely, that's really lame for them. But maybe it's also gas prices. Maybe that weighed on those earnings a little bit because they do sell a lot of gas at Costco. And if gas prices were lower than maybe a lot of people anticipated or the company anticipated, maybe that's why this is where we'll find out a lot of detail in that conference call.
Thanks to falling prices at the pump. Joining us now is Council of Economic Advisors Chairman Jared Bernstein. Jared, this should all be great news. Lower prices at the pump, consumers are still spending, the stock market is up with the Dow touching all-time highs, and yet there's this disconnect from the message that the Biden administration is trying to spread about things are good and how a lot of people seem to be feeling about the president's performance in this arena.
Well, I actually think... Oh, hold on. Just a flipping flapjacking moment. Hold your horses, okay? The consumer is barely at the beginning innings of even feeling any better, okay? 2024 is when the average person will feel a lot better because real wages will be in a really good place and inflation will be very low. But this is just like a very recent change. It takes a while to catch up to the consumer. No different than we already had inflation hit in 2021, but the average person didn't really feel it as much. All of a sudden, 2022 hit, everybody felt the inflation. And then all of a sudden, everybody's talking about inflation, right? And obviously into this year. So there's a lag time there. So I think that's important, right? Also, keep in mind, a lot of people obviously, you got to figure half the country's not going to feel good no matter what, right? If their guy's not in office. No different than, obviously tons of Democrats didn't feel good when Trump was in office, right? Trump always had really bad, I think Biden's numbers are even lower than Trump, but Trump always had really bad numbers as well. So that's just something to keep in mind. Like if people don't like you or like your political party, they're going to say they feel bad, even if they don't. Like that's just the way it is.
459 estimate. Revenues also well ahead at 10.97 billion compared to 10.22
really good numbers
billion.
There, Lennar.
Fourth quarter home building gross margins missed though at 24.27.
Really good numbers.
The street was looking for 24.5, and also below guidance of what they'd offered. Deliveries beat compared to what the street was looking for at 23,795, and new orders also better than expected. Now, in the release, CEO Stuart Miller said that the economics environment shifted as interest rates rose for most of the quarter. We know that they peaked at 8% in October, then subsided.
That's a big number
Higher rates
from Lennar.
Tested home buyer sentiment, although purchasers remained responsive, he said, to incentives that enabled affordability. So that's one of the things that they're looking at. They think that housing demand is going to be stronger, certainly what we've seen over the last couple of days. That is one of the things that is outweighing the fact that they have such short supply. For 2024, they see deliveries of 80,000, but says they're not going to provide full year.
Wow, I can't wait to grade Costco's income statement in just a moment, and Lennar as well. Well, while this guy's talking, I'm going to grade Costco and Lennar income statements right now for you guys. Anyways, Costco, grade A income statement. I would expect no different from Costco. Only reason it's not an A+ is, I think their revenue growth could be better, right? Their net income growth could be better. If they had higher growth rates, I would probably give them an A+, but good numbers overall. So Lennar, B- for Lennar in terms of their income statement there. When it comes to Lennar, it's just, the revenue is really good. The financial services revenue is really good, but multifamily, for instance, went from operating earnings to operating loss. That's not ideal. Other loss was up $20 million. And then also corporate general administrative expenses out of control. It was $80 million at this time last year versus $136 million. That's out of control, just to be honest with you guys. So, their net earnings attributable to shareholders was up year over year, but it wasn't up as much considering how much revenue was really up, because revenue was up like $800 million, right? So, decent. I call it decent. That's why I gave them a B- there for their income statement overall. Okay, time for Costco conference call here.
Today's call is being recorded and all lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star 1 on your telephone keypad. To withdraw your question, it is star 1 again. I would now like to turn the call over to Richard Galanti, Chief Financial Officer. Please go ahead,
Pretty muted
sir.
reaction so far.
Thank you, Lisa, and good afternoon to everyone. I will start by stating that these discussions will include forward-looking statements within the meaning of the private...
By the way, and the thing I love about Costco conference call, not only are we going to hear about the consumer, things like that, but this is one of the most well-run companies in the entire world. Let's be very clear about that. And so when you hear a management team like this talk, I think it is you really can tell the difference between a team like this that is top tier versus other conference calls you'll listen to in the future that are maybe mids. Let's just call it that.
As of the date they are made, and the company does not undertake to update these statements except as required by law. Benefit of 50.
So he says, my gut says sell off tomorrow. Could be. A lot of people, or maybe the market maker wants to screw a lot of these call option holders. There's a lot of people that got a lot of calls expiring tomorrow that are probably up handsomely on those. And so, there's a lot of important financial things out there that are maybe looking to, have the market not be so good tomorrow.
Net sales were benefited by approximately 0.5% to 1% in the U.S. and worldwide from the shift of the fiscal calendar as a result of the 53rd week in fiscal 2023.
By the way, that is something that can hurt these companies' earnings more in 2025. These companies should be able to earn still a lot of interest income in 2024, but the number could be substantially lower in 2025. So do keep that in mind. That is something we could have work against the market in 2025, is that interest income dropping down substantially for a lot of companies, and that could hurt their earnings per share and their net income.
As of Q1 is primarily attributable to lower benefit from the stock-based compensation from a year ago. Finally, in terms of upcoming releases, we will announce our December sales results for the 5 weeks ending Sunday, December 3rd.
I don't like that. I don't like the whole special dividend. I think he said it's over $6 billion cost. If I was a shareholder of Costco, I'd say keep it. I'd rather have you guys have that $6 billion plus as a cushion on the balance sheet. Have a more normal quarterly dividend. If we want to up that a bit, we can. Keep that money. Use it for expansion. Keep it for a rainy day. Get some great interest on that money right now. You can get on $6 billion. You can get 5% right now. That's a substantial amount of money. So that's just me. If I was a Costco shareholder, I'd be like, keep that money. It makes me feel more comfortable, the company having the money versus let's pay it out to the shareholders in special dividend. That's just my 2 cents.
So do you expect deflation, especially on the food side, as you get through the next couple of quarters?
Good question. Deflation.
Well, talking to buyers, we've seen those, even during the quarter, we saw the trend towards that 0 versus the 1. But at the end of the day, the buyers are looking out 3 to 6 months. They have, on the fresh food side, commodities-wise, they haven't seen a lot. There are a few things that are up and a few things are down, but no giant trend either way. Look, as you know us for a long time, we want to be the first to lower prices. We're out there pressing our vendors as we see different commodity components come down, and certainly on the non-food side as we saw shipping costs come down, things like that. And so probably a little more than less, but we'll have to wait and see. We don't know.
In my follow-up is another point that you've made for a long time is that Costco's been a draft off the profitability of the broader retail sector. If we compare Costco's operating margin over the last 12 months versus where it was prior to the pandemic, it's 300 to 400 basis points higher. And yet across retail, there are signs that profitability is coming down. So now, what would stand in the way of Costco either maintaining this existing rate of operating profit margin, or even further growing it from here? Is it just simply going to be a function of your ability to drive further sales growth in the consistently mid single digit range or better?
Sure. Well, happily, I'm able to say that you get to figure that one out. At the end of the day, we're, as you've known for a long time, we're a top line company. We want to drive sales. Certainly, as there's been deflation in certain products, we've seen units go up. I'm looking at one example here. Just in the last month, $100+ million of KS nut items, where sales were flat to down a couple percent, while units were up in the mid-teens. That takes a little more labor to do, but at the end of the day, that's what we want to do. We want to drive people and frequency. And I think as long as we see, renewal rates continue to do what they do, as long as we see new signups continue to do what they do, and hopefully continue to get people to convert to executive as well, and constantly driving the best value out there, we'll be in good stead. And so far, we've been able to do that, and I think we'll continue to be able to do that.
We'll come back over here at Costco call in just a second. I just want to hear what they're talking about here at the beginning.
The Magnificent Seven that ignored everything else. There is a lot of value here. If you look at the 5-year history of the IWM, it has outperformed the spiders except for the last period that we've been in. So I think we could see a convergence continue.
So I would think that the weak dollar is probably a symbol of the Fed easing. So I would have thought that would go along with the Fed easing. So I think I'm not worried about that. IWM, 40% are unprofitable companies. So you would think that if the Fed eases, they have a better chance of surviving, not being profitable, but surviving. So I'm not really shocked by either. And then going into the last month of the year, what do people want to buy? What has not run, not what has already run?
Yeah, I mean, this really sort of ignited the trades, or has ignited the trades where financing was needed. Anything that where you had to borrow money, all of a sudden, that all looks good here.
Yeah, it looks good right now as long as the economy is in good footing. And I'll just say this about the Russell 2000. I mean, it has rallied more than 20% off its lows in the last month and a half. It's still down 20% from its all-time highs made in Q4 of 2021, and it was one of the first sectors to turn when the Fed indicated that they were going to start raising interest rates. So they led on the way down. And again, they're leading on the way up. But let's just see. To me, it looks like it's in a bit of an equilibrium. And again, it might be that rates have run too far to the downside in the near term, to Chris's point about what the weak dollar might ignite going forward. I mean, Jeffrey Gundlach, we were talking about it last night on the desk. I mean, he seems a little bit worried about, inflation picking back up. That being said, look at where crude oil is. Look at where nat gas is. If you think about, and I'm just going to bring this back to large caps, right, which are very exposed to the dollar and a lot of these input costs. When you have a dollar move the way it has in the last 2 days, and you were an analyst and you're trying to think about the economic landscape and the visibility that the companies that you follow are in the new year, you say to yourself, 2.5% in 2 days for a multinational, you know what I mean, that gets, say, more than half their sales outside of the U.S., and especially if some of these parts outside the U.S. are starting to inflect, let's say, before we are, at least maybe that's what their stock market, well, that should buoy earnings. Okay, so I get all that. Lower rates should buoy earnings. Right. So if you're looking, FactSet has, I think, expected 12% year-over-year earnings growth for 2024. They're expecting less than 1% earnings growth this year. They were up 4% last year. So let's just say that 12% is high, but with the dollar down and rates down and other input costs, maybe that's how you get with more cost cutting the like. Maybe that's how a 19.5 multiple.
There you go, Dan Nathan. You're coming around, man.
For earnings next year.
Look at
with
you.
The 700 S&P, it's 19.5
There you
times.
go.
It's 1 or 2 turns over the 10-year average or something like that. So I can see why people are saying maybe we're not that expensive, especially if you take out those top 10 names.
There you go, Dan Nathan.
Dan, I'm just making the case.
There you go, Dan Nathan. Look at you. Look at you, Dan Nathan. Look at you. Starting to see it.
And you begin to wonder, is the market actually discounting a change?
Once we finally win Dan Nathan over the bull side, he's been so bearish the last 2+ years. Once we get him over the bull side, woo, then we're going down.
That resembles the past part of the year. You reward the winners and you sell the losers for tax reasons. That has not happened here. For 6 weeks now, there's been all these little subtle hints of change. It's become certainly more overt the last several days. We see it with equal weight S&P over cap weight.
Does it make you more skeptical of these moves then, or you think it's different this time around?
You know what it reminds me of? It reminds me of in the 5, 6, 8 weeks in November and December of 2021, where you began to see value flash some signs of life. And it didn't make any sense in context of the macro environment. And it set off this chain where value would work into 2022. I think there's some glimpses of that right here.
In the context of this is actually a rotation that started weeks ago, maybe interpreting the...
I don't feel like that at all. If anything, I feel like right now we're kind of in a 2020-ish. Let's call it Q4 2020. That's what it feels a little bit more to me like in regards to kind of the market. Maybe Q3, Q4, something like that.
Coming in.
And then he said, I don't believe any of it.
Yeah, he doesn't.
No,
he believes.
No, I believe all of it. I don't think
that
it's in the market right now. I mean, I think it's in prices.
Well, I think the U.S., we went from worrying about SPR and worrying about oil price to now outputting oil at the highest level historically for the U.S. So that takes a huge headwind for the consumer and the markets.
I mean, I think, Dan, correct me if I'm wrong. I also think what you're trying to say, which I agree with, is there's a level where 10-year yields down is not an easing of financial conditions. It's a message, whoa, wait a second, something's wrong. Or there's a level on crude where it reflects demand, not supply. And I think using the market as the gauge for when those hypotheses are actually realized is important. I look at discretionary versus staples. That's my barometer of the economy. When discretionary is outperforming staples, you're generally in pretty good hands. That has largely been okay for much of the year. But I think that's going to be a very important tell on whether, Dan, some of the things you talk about, the market begins to respect.
I guess the question here is, I mean, we've had a precipitous move in the 10-year yield in just the past couple of days, right? And we're now well below 4%. So what is that level where you're like, oh my gosh, what is going on here? And what is it saying about the economy and future growth? Where do you think we are there? Because 3.9 seems like great, amazing.
Yeah,
right
I don't know if it's recession or if it's just this finally we've been waiting for the pivot. However, this giant run we've had in the market since October 27th or whatever it was on that premise, right?
It's like
that we will be at the end. Yes.
Right.
So I would think that it's somewhat of a sell the news. That's sort of surprising to me, the magnitude of this. I still come back to something that was an issue a long time ago. It doesn't seem to be anymore, which is we're going to start to see a lot of 10-years for sale, right? The government has to fund. And so that's not that far away that we're going to revisit this issue. Now, it is good that rates are down. They're going to owe less interest, but nevertheless, supply-demand dynamic is still in force. So I am short treasuries, which obviously was not the right place to be this week. But I haven't covered, I haven't added. I'm not quite sure what to do. I'm surprised at the magnitude of this rally, though.
I guess it was because the message that Powell sent was so unexpected.
Well, we were talking about this. Why did he seem to be giving it away for free?
Exactly.
This rally hasn't been that crazy though, other than the Russell.
Of this, he said we're not.
Look at the S&P 500. Look at the Nasdaq. Tell me the rally. I mean, if anything, I think those stocks have shown up weak. It's really the Russell rolling, the small caps rolling, which have been underperformers massively for several years.
For him to pivot like that doesn't seem like it's...
And by the way, we could be first inning on this move, by the way, and getting ready to go in the second inning. Tom Lee says 3,000 for the Russell. 3,000 we're going to, he says. We're at 2,000 right now. If he's even remotely close to being right, we're in the first inning. We're about to go to the second inning of this game. So just a little food for thought there.
Bring in the man who can answer all these questions here. Over the moves over the past day and a half beg the question, did Fed Chair Jay Powell send the right message to the markets? Steve Leisman.
I think he should have waited, my personal opinion. Let's hop back over to Costco for a moment here. Oh, it ended. Costco call just ended. Okay. So Costco call was interesting on several fronts. I mean, the good news for Costco is, as I spoke about there, discretionary spend seems to start improving for them. That's good news. It's good news for holidays for everybody. That's good news for the economy. That's the type of thing you want to see. Oh, is this another different Amazon Prime van now? Or is this the same one? They can't still be in the neighborhood. It's got to be a new one. good overall. By the way, I think tonight's the cutoff for most websites. If you want to order something for Christmas, I think tonight's the cutoff of like the safe date in terms of being like sure you're going to receive the item in time for Christmas. Just something random out there. If you order from Amazon, you're probably good, but from a lot of random websites and things like that, just keep that in mind. But yeah, that was good. Obviously, they're able to make a lot more money from gas because a lot of gas stations, it sounds like, have taken up their profit they're willing to make. Obviously, I feel like a lot of gas stations are in a situation where they feel like they got to get the money now. You know, if the bottom line is if you're going to sell less and less gasoline from your gas station because more and more people are going EVs, right? And they're charging from home. You better make your money this next 5 to 10 years, right? Bottom line, in most gas stations, like, they don't do big inside sales. They don't do big volumes inside. You know, QT was different. You know, we always did big numbers inside and when it came to gas. For the average gas station, like, most of these guys are only making their money from gas because a lot of people don't buy stuff from inside the store, really. And so if you run a gas station, you're like, dude, I got to make as much money as I freaking can this next 5, 10 years. Because with more and more people jumping over to EVs, there's just not going to be a need for them to stop here anymore. And then if less people are stopping there, then less people are obviously going inside to buy a pack of gum as well, right? Or soda or a beer or whatever it is. So, and that benefits Costco huge because they're able to make some more money from gasoline sales, right? And they do a lot of gas volumes. We know that at Costco. So good for them overall, right? So overall, you know, the Toll Brothers thing, I mean, 105, are you freaking kidding me? I mean, that stock is calling my name to hedge heavier against that. It's just the issue I have with, the issue is everybody freaking keeps buying new damn homes. Even with interest rates where they're at. And, you know, there's many various reasons for that. Low inventory, home builders are offering these incentives. So you know, basically get your mortgage the first year or two, like for a much cheaper price because these mortgage rate buy downs. And so it's just kind of supercharging those business models. And you look at a chart like, holy moly, look at this. This is a holy moly. This ain't no dang holy moly. Look at that baby. That's a straight parabolic move. I mean, geez, for a home builder. And you know, Toll Brothers stock will come crashing down. But the question is that 6 months from now? Is it 12 months from now? Is it 24 months from now? Because as I've told you guys many times, we could be in a time period right now like we were when we came out of the tech bubble, 03, 04, and guess what happened 05, 06? Home building went crazy. The home building stocks went crazy. Look at this parabolic move. You know, April 2003, Toll Brothers $9 a share. The top of the peak housing bubble in terms of that excitement cycle, July 2005. So 2 years later, Toll Brothers is $55. The stock 5x'd in about 2.5 years, right? Boo! So that's a question. Where's Toll's top? Is it here at 105? Is it like 120? Is it like 150? Is it like 175? Like we know that baby will come crashing down again. It's just the hardest thing with a stock like that is predicting when. But at the end of the day, Toll will come crashing down, probably to the $30 to $50 level again. But to predict like exactly when that's going to transpire is the hardest damn thing. Toll could go to 200. You never know, right? It's in a blow off the top phase in regards to Toll Brothers stock, right? And that's in regards to all these home builders. They're in a blow off the top phase. And when you're in that phase, you just don't know where the peak is, right? We do know this is a cyclical industry and they all will peak out and they all will come crashing down hard. And when I say come crashing down, they will crash like 50% plus. But the question is, does it go to 200 first, then crash down to 100? Does it go to 150, then crash to 75? Or does it go to 120 and crash to 50 at that point in time, right? That's the biggest question. So I don't mind hedging against Toll over the next couple years here. because that's one I do feel confident that when the market goes through the next time, tough time period, whether that's a year from now, 6 months from now, 2 years from now, 3 years from now, whenever that next time period, when the market really gets hit hard, the home builder is going to get hit really hard that next time. The one thing that's scaring me, commodities. Look at the top of the list here today. Crude. Is it an issue at 71? Absolutely not. But if we really start to get risk on in this market in 24, that Russell really does what Tom Lee's talking about, goes from 2,000 to 3,000, I'm very concerned that commodities could end up starting to go through another bull cycle in 2024 at some point in time, which will then cause inflationary numbers to be high in 25, which could cause a whole host of problems for us, okay? So that's something I'm kind of looking at. And do remember, at the end of, kind of the prior to the GFC situation, do remember what happened. Crude went on a crazy bull run at the very end. If you own some smalls, you're probably making some money. That's all I'm going to say, because the smalls are rolling. And I hope Tom Lee's right. That would be fun. Could you imagine the Russell goes to 3,000 and really hits a 50% up number in 2024? I mean, stocks like what if he's right about that? A stock like Fubo would increase probably, my guess is 300 to 400% in 2024. If what Tom Lee says is correct. If what he says is correct, Fubo's probably going to have a 300 to 400% year next year, which is just mind-blowing to think about, right? Which, by the way, if Fubo was to go up 300 to 400%, keep in mind it's still not even remotely close to all-time highs. I mean, that's still down like 70% from all-time highs, so that's a little crazy mind game to play, right? If he's correct on that, a stock like Honest is probably up 300 to 500% next year, if he's right about that, right? Which puts that stock probably $9, we can call it $8 to maybe $10, something like that, right? Which is, once again, $8 to $10. That's the craziest thing. These stocks could go up 300% plus, which is probably what would happen if the Russell's going to roll 50% next year, like he's talking about, right? But a stock like Honest is, if that stock rolled that heavy, you're only back to pricing that we were back in kind of 2021-ish. But I'm not even talking about peak 2021. The peak was like, nearly $20 a share. I'm talking about like in here. That's the most wild thing to think about, right? A stock like Revolve, if he's correct on that, a stock like Revolve is probably going to 2x, 3x next year. So it probably goes to 35 to maybe, $50 a share, 35 to 50, right? If he's correct on that, which is only back to where that stock was like back in like 2022. That's when you start looking at some of this, you're like, I can see it being potential. Do I want to bank on that? Like as far as call options go? No. I'll let things play out how they're going to play out. I got my shares in these stocks. It's fine. I don't need to get greedy. But if he's really correct, I mean, some of these stocks will jump hundreds of percent next year. If he's correct. That's wild to think about. Absolutely wild to think about. Alrighty, folks. Much love. Appreciate you joining me. Have a great day.